Welcome to It's No Secret, a podcast for those who want their money questions answered.
Join us as we talk to real Kiwis and share truths about our own financial lives, because the truth is, there is no secret to achieving financial freedom.
Hi lovely listeners, welcome back to another episode of It's No Secret. Today we'll be walking you through step by step how to get on the property ladder. Whether you're in market ready to buy or thinking about buying a property somewhere in the future, it pays to understand how the process works, who you need in your advisor group or in your team, basically, house buying team, plus what to expect when it comes to crunch time. Now, we actually did this podcast a few years back, and obviously times have changed, things have moved.
Tripled.
Yep. Generally speaking. And so we thought it would be a good opportunity to just do a remake in the current environment that we're in right now. First place to start is you obviously need a deposit to buy a house.
Well, you need some cash.
Yes.
Right?
In some form, yes.
Yeah, you need some cash. And your deposit can be funded from a few different ways, right?
Yep.
So I'm going to throw it back to you, Christine. Why do we need a deposit? Why do we need cash?
Because
why can't we get 100% from the bank?
Because that's too risky for the bank, basically.
Yes.
Yeah.
Yes. Perfect. Okay. So the bank's not going to give us 100% mortgage. Also, that would be deeply stressful, and I just don't even want to think about that.
Yeah.
So naturally, we need some money. How much money do we need? This is like a how long is a piece of string kind of question, because it depends on what type of property you're buying, where are you buying, what's the price point, is it a new build or an existing, are you going in a primary bank or a second tier lender? Those things factor into what a bank is willing to lend you, therefore what is your LVR or your loan to value ratio, and therefore how much you need to personally contribute.
Nice. What's an LVR?
Oh, well, loan to value ratio. So basically you can think of it as the percentage of the loan as a total proportion of the value of the house. Right? So you commonly hear about an 80-20. So banks will lend you up to 80% of the value of the home, and you therefore need to front up 20% of the value of the home through cash. And that's what's commonly referred to as someone's deposit. Now, there are some differences around having a slightly different LVR or a different deposit requirement, which I feel like you've got some great detail on, because I'm not fully up to speed with like new builds, but okay. It's mostly to do with like new builds and off the plan properties.
Yeah. Yeah, nice. And then also investment property is different again in terms of the percentage that you need to invest in it.
That's right. Yeah. So some of this is to do with, I guess, lending requirements and restrictions on a various country basis. So, as an investment property, you do need to have a higher deposit than just 20%. But I guess for the purposes of this potty, we're mostly kind of assuming that you're getting into a home that you're going to live in.
For the first time. Yeah, nice. So just on the deposit amount, let's run through the kind of scenarios for each. So you've just talked about 20%. So that is kind of the ideal. What would that be on an existing freestanding house?
An existing residential house. So just a house that's already built, obviously. Also, I think for people getting into their homes for the second time or like upsizing, also you will often see, if you're on a bank's website and you're looking at mortgage rates will vary based on the LVR. So you're going to get the best rates from the bank if you have a 20% or higher deposit. And if you have a deposit that's less than 20%, you're going to have to pay slightly more, because as you pointed out at the start, you're slightly higher risk. So you often hear that like the dream state or the goal is a 20% deposit, but depending on where people are trying to buy and how much they can save, that's not necessarily achievable. So there are some other options, 5 and 10. What could I buy for 5 and 10, Christine? Tell me.
So for 10%, you're known as a low equity borrower. So that could be like the same kind of house as a 20%, but basically at a lower threshold. So you are just higher risk.
Yes. So you'll pay a higher rate of interest, and potentially sometimes something called lender's mortgage insurance, or a premium on top of your standard interest rate to basically cover the extra risk that you pose. Important to note that if that is a way in which you get into the property market, the minute your equity becomes 20%, you can renegotiate with the bank on that. So if you buy in with a 10% deposit, you're not penalized forever because you started with a 10% deposit. You do have the opportunity to basically reassess, reduce your level of risk in the eyes of the bank once you hit that 20% equity. And that's why, if people are often buying with that lower deposit, they'll be really, really focused on paying extra principal off their mortgage as soon as possible so that they can get to that 20% mark and therefore renegotiate.
Yeah. Firstly, I didn't know that, so that's interesting. And secondly, it really does come down to, like a common question is, do I pay off my mortgage or do I invest elsewhere?
Yep.
And it is such a situational thing as to,
Correct.
like what the agreement is, are you on fixed or floating rate?
Are you with a tier 1 bank? And when we say tier 1 banks, we mean essentially the big 5, so ASB, BNZ, Westpac, TSB, all that kind of stuff. Or are you with what's called a tier 2 lender, which is still a good credit provider, but someone that's not a main bank and therefore has higher rates of interest that they would apply on their loans. So it can be reasonably common that someone with a 10% mortgage might need to go through, a 10% deposit might need to go through a tier 2 lender, and then their overall goal that they work with their broker on is once they get to 20% equity, they will refinance with a tier 1 lender.
Right. So a tier 2 lender can basically be used to get on the property ladder at a lower deposit.
Higher interest.
Yep. And then you can swap over.
Correct.
Yeah. But that, I guess, and we'll talk about this later, is the benefit of potentially having a broker as well, who can negotiate that for you. Yeah.
Exactly.
So last one on the deposit percentages, 5%. You can get a turnkey new build property. What is that?
Fantastic question. It's essentially some of the kind of off the plan properties as part of developments where often you can essentially go in and buy the property with a 5% and then that essentially kind of gets you in. So they're more limited. Why? Some people might be like, why do I have to have 20% for a, brick and tile house that was built in the 60s on my street, but I could go and buy a new turnkey for 5%? The reason is that the government and the powers that be are trying to incentivize new build properties and obviously increasing the housing stock in the housing market. And so they want to encourage those that are getting into the property ladder for the first time to consider new builds in that space, and obviously making it more affordable or accessible.
Nice. And that could be with a tier 1 bank because it's more of just the incentive. It's not about necessarily the bank itself.
Exactly.
Yeah. Nice. Okay, cool. Great. And so once you have started saving some money,
and you think you might be at a deposit,
you're like, okay, I mean,
that's the question, right? You have to figure out, do I have enough of a deposit, and this
what am I
is
comfortable
where
with as well?
Exactly, and this is where the conversation starts to become quite complex because, to your point, it's very situational. It's very much a case of where are you looking, what in terms of suburb and location around New Zealand. What type of property are you looking for? Do you have strict requirements? Are you a single person or a couple that can live in a 2-bedroom? Are you trying to buy a family home because you have children? That looks really different for various different people, and that will therefore determine what your price point in terms of how much you ideally need to spend to buy a house is. And therefore, once you roughly know that, you can start to work towards whether you're saving a 10 or 20% deposit. Now, I think at this point, this is where the first person that needs to be in your toolkit of advisors comes into play, because it can be really hard to understand how to calculate that yourself just with some online calculators. There are some good online calculators, but the easiest thing is to just talk to someone that does this for hundreds of people every single week. Yeah. And that person is a mortgage broker.
Yeah, nice. And so how do I find a mortgage broker?
The internet.
Yeah. Hit up Google.
Exactly. I think one thing that's probably key to know is there are people within the banks that can help you find a loan, but they're of course only going to offer you mortgage solutions within that bank. So most people like to look for an independent mortgage broker or a broker that's working in a different type of firm, because then they have a whole range of lenders, both tier 1 banks and tier 2 lenders. So they can talk to you about, are you at 5, 10 or 20%? Where are you at in terms of, your deposit? What size of deposit that you have, how does that translate into an actual property price point? Because also I think, oftentimes people say, okay, I've saved $50,000. Maybe this is close to a 5 or 10% deposit. What can I go and buy with that? Forgetting that they then also need to factor in things like legal fees or
Builders
reports, other things. Also potentially not knowing that they might get something like cash back from the bank to help with some of that kind of thing. So, or some of those expenses. So a mortgage broker does that day in, day out. And probably has seen like every single situation in terms of types of income, stability of income, like single working families, dual income earners, all that type of stuff. People with student loans, people without student loans, they are your best bet to help you navigate that, because it really is a case of you don't know what you don't know. And so just talk to someone that actually has seen it all.
Yeah, nice. And some common kind of mortgage broker firms. The first one that I thought of was Squirrel, because I'm pretty sure that my sister went through them.
Oh, yeah, okay. Yeah. So Squirrel do some. Yep.
Any other ones that people could hit up the internet for?
Yeah. So I guess one of the larger ones is a company called like Loan Market, that have, I guess, various franchises or, around New Zealand. I would just Google like mortgage broker near me. It's probably one, because then you also have people that are just essentially self-employed brokers that have a small client base that they work with, and they're entirely independent and they're probably more flexible. Or, we know some brokers over on the shore that specifically work with new to New Zealand residents and people that don't have like a long work history or living history in New Zealand and don't have an appreciation for necessarily some of those challenges. That's their specialization. So I think it's a case of like, find someone close to you that's going to be easy for you to meet with and talk to. And if you have any niche parameters,
like you're a contractor as well.
Yeah, exactly. Like chuck that into the Google search and find someone that specializes or deals with a lot of other clients in that space, because that'll really help.
Yeah, nice. And talk to your friends and people who have been through it before. Like
personal recommendations from someone that has a great relationship with their broker is also really good.
Yeah, for sure. Love it. Cool. So
what's next? You found a broker?
Yeah. Well, actually, no, I think like an important thought, and something that we spoke recently with Dean on the podcast about when we were talking about alternatives to investing in investment property, is like the overstretching ourselves in terms of like what we can afford or what we feel like we can afford. And I feel like the deposit amount also comes into that. Well, it's something that Ollie and I have definitely thought about of, do we want to, just because you can do 20%, why wouldn't you then do 30%?
Right.
Or like,
if you have 30% saved,
do you put that all on the mortgage, or do you put, and like, are you better to just put all of your cash into this one asset because that's not very diversified? And so actually splitting up the pot of money that you personally have.
So question back to you before I answer that. Remember that time that I sent you to go and see a broker and you hated it?
Yes,
can you just talk us through that? What happened?
Okay, so this, for context, it was Kat's, your broker, right? We were just toying up with the idea of getting on the property ladder.
You're literally the person that we're talking about right now. So tell us
more. We probably still these people actually, because we don't own a property yet, but we've just chosen not to. And I think we went, and it was definitely on the basis of a little bit of FOMO. And so we're like, okay, we also want to find out how far can we extend ourselves and what was the limit. So at the time, I'm pretty sure she said that we could buy a property for up to 1.25 million, but we were looking more in the like 800, 900 realm, because that was what we felt comfortable with. And our experience was that we just kind of felt pushed a lot to be lent more, and so it didn't work out for us, but it was good for us to know that based on the money that we had, we could go that far. But then ultimately, like, our comfort with risk in terms of a mortgage meant that we didn't want to stretch ourselves.
Did you have to go through any budgeting?
No, not really. She kind of did a breakdown of what do you have a student loan, and Ollie had a bigger one than I did, and therefore would you pay that off to then not have that come off your income in terms of serviceability, and then like LVR, that kind of stuff.
And so then when she was saying, okay, you could buy a house up to 1.25 million, was she then obviously telling you how much your mortgage repayments would be on that basis? And were you and Ollie then doing the work to figure out if you could afford those mortgage repayments?
I don't think we did it as thoroughly as we did recently when we kind of went through the process ourselves. But so recently I did a spreadsheet where I went through and found properties and on the spectrum of values and how much would the interest repayments be, and then as a couple how much do we save ongoing, and therefore what would the trade-off be between renting versus buying in terms of disposable income at the end of the week. Is that what you mean?
Yeah, exactly. Yeah. So I think for people that don't run their own spreadsheets like you do, that's ideally what you're looking for a mortgage broker to also help you with, because you're right in that like one part of their job is to help you identify how much you can buy to in terms of a price point, but equally they need to help you understand what your cash flow is going to look like once you actually buy that property. And that is so much more than just the mortgage repayments, because you have to factor in rates, you have to factor in utilities that you may not be currently already paying for, you need to factor in maintenance like upkeep, all that kind of stuff, potentially body corporate, potentially sinking fund depending on the type of property you buy. So having someone help you do that if you haven't already got a budget spreadsheet, or if you are someone that loves a budget spreadsheet or something like that, the easiest way to do it is basically just duplicate it and create a version where you pretend to be a homeowner. Yeah. And you put in line items of, this is my mortgage, this is what my estimation of rates will be. You can get that information from a good broker or from some of the websites online, estimating some like maintenance costs, that kind of thing, making insurance, that's quite expensive, that kind of stuff, making sure that that's all in there, and then basically seeing, well, what's my cash flow at? Like, is this something that a mortgage payment is the same as what we're already saving and paying for rent? Because underlying assumption here is that you've been saving to get to the deposit. So you're going to stop saving because you've got the deposit and therefore you've started paying a mortgage. So will it be the same as that? Will it be more than that? Will we need to, reduce our discretionary spending from other areas as well to help us pay off this mortgage? Or will it be less? And will I therefore have some flexibility around also being able to, do other things outside of just repaying a mortgage?
Yeah, right. So the answer, I guess, is it really depends on your, you kind of have to work out the scenario and then decide what you're comfortable with in terms of like cash flow, and then potentially maybe like a size of emergency fund could be the thing.
Exactly. And also then I think this informs price point, right? Because people often can go through this exercise and find out that they could buy a $2 million property, for example, because of their high incomes and serviceability. But when they look at what that would mean from a cash flow point of view, if they did that, they're potentially not okay with not being able to do other things, whether that be, holidays or discretionary expenses or saving, right? And so then it forces you, whether it's you by yourself or you as a couple, to start to have the conversation of like, how much do we value getting into this specific house with this type of price point? And there can be more nuance to it. Is it important? Like we've had the discussion before in terms of upgrading. Is it more important for Luke and I right now to have a bigger home that is more than 2 bedroom and that would therefore require a much larger mortgage and higher repayments, or is it important for us to also have flexibility in our cash flow to do other things like go on family vacations every year? And only once do you start knowing what your repayments and I guess deposit would look like that you can then kind of start working through that conversation.
Yeah, for sure.
I also assume that a lot of people don't do this level of thinking about it, and they just probably like buy a house and then deal with it after. And in fact, as I'm saying that, I definitely know some people recently that did that with a 10% deposit. Although granted, they were like, okay, the 10% deposit is really stretching us to our max and we've just gone all in because we want the family home and we'll just figure it out. And I think that is also true. Like once you're committed to a mortgage, people will figure it out. It's just how much stress do you want to be in that time.
And how much you're willing to sacrifice really in other ways.
Exactly. Said friend texted me not long after and was like, I've had to downgrade from BFT to a community gym. But at least that they could see, like they were kind of saying it in jest, but it's that kind of thing, right? It's they'd decided that was a worthwhile sacrifice. But maybe thinking through that in advance can also be helpful.
Hilariously, I had a friend that I was talking to recently who also just bought a house, and she was saying that she had to downgrade from like the fancy gym to home workouts as well.
Why is it the gym that gets cut?
Yeah, this is our health, people. Oh yeah, but that, okay, cool. There's a good rounding out of the deposit amount and comfort level. So once you've decided how much, you go and you need to get a loan approval. You go to the broker and they help you with it.
Yep.
Hopefully.
So hopefully you found a good broker when you've been figuring out how much you can actually buy for anyway. And they've been talking through some of the considerations that, you know, they might say to you, hey, you need to go and save for another 6 months and then come back, or you're all good, let's start looking. So what will typically happen is that they will need lots of information from you because they need to submit for pre-approval for one of the banks. So ideally a good broker is going to be able to say to you, hey, Christine, I am pretty confident that I'm going to get this across the line, but you then can't go and bid at an auction just based on them saying that, because that's just their word. That ain't money in the bank. So you then need to come to the party and give them all your financial information so that they can start to put together a case that obviously then goes to probably just one bank, and they seek a pre-approval. If they hit some unexpected hurdles, then obviously they regroup with you and have a look at approaching a different bank or a different type of lender. But the ideal state is that you have a pre-approval from a bank, which essentially is saying, we will give Christine $1 million for a property, and it will have a time frame in which it lasts for. And I think they're roughly 3 months.
Oh, yeah. Okay.
Yeah.
And so how does KiwiSaver feed into that in terms of like,
in what way?
Getting a pre-approval, because in how the deposit is made up, maybe, or is that not relevant?
Well, it's a question for you. It's a question of, am I using, I guess we didn't talk about this, but how is that deposit being sourced? Is it being sourced from your KiwiSaver, your savings, or a combination of the two? And if it is, including your KiwiSaver, as part of that pre-approval process, you're going to need to provide some details around that amount, because if you were just using savings, the bank is going to say, okay, well, Christine's told me that she's got savings of $100,000. We need to see that.
Yeah. Okay.
Yeah. So they're asking for proof, basically. And so same thing goes with KiwiSaver. If you're saying, hey, I'm going to use my KiwiSaver, they'll just ask for proof at the point in which you're going through pre-approval process.
Yeah. Nice.
Yeah.
Cool.
You don't have to do anything until you have literally signed a sales and purchase agreement and have bought a house, outside of just showing them that you have KiwiSaver available to use.
Yeah, and the pre-approval needs to be valid. To your point around it only lasting for 3 months. So so if you're looking and that process takes longer, you have to continue to get it.
Exactly.
Right?
You need to be in contact with that broker in terms of making sure that you're keeping them up to date with your progress. And if the actual looking for a property is taking longer than expected, making sure that they are checking in that nothing's changed from the bank's end. Because I think the thing that other people potentially like forget is it's not just about you. It's also in the context of how you fit into the bank's overall risk. So your situation may not have changed, but their view on how risky you are right now in comparison to the other people in their customer base that they've lent to may be an impact. And so like banks can naturally change their mind.
Yeah, so you're basically
you're on
at
your
mercy
own
of the bank.
Good luck.
Just coming back for a second, how much is it, like, is a mortgage broker free? Like, am I paying this person?
They're free to you because they're paid by the bank.
Yeah.
And that's why only on the settlement of a loan. And I think that that's fine. I mean, obviously we've talked about commissions in general across other things, but you typically wouldn't be paying a direct fee to them because they're ultimately going to be paid by the bank once you get a loan anyway. Yeah. So that's why it's really good to go to someone that has lots of different banks that they consider, because then you really do know that they're going to be finding the best deal based on your circumstances.
Yeah. Nice. Love that. Cool. Okay, so we've got pre-approval. We're out and about in the housing market.
We're going to open homes.
Yeah,
we're bidding. This is the fun part. It's stressful, but it's fun. I don't know. Is it?
I don't know.
I don't know. I feel like I'm pretty out of sync with this.
Yeah. Well, the idea of an
I've
auction
also
kind of
never
freaks me
bought a
out.
home at an auction, so I'm just talking smack.
I feel like an auction would be wildly stressful.
Yes. I definitely think, It can be a good idea to have other people bid for you at auctions. Like we've bid at auctions for friends before going through this process.
Yeah.
I've also heard of people that have really great relationships with their broker, have their broker come to the auction with them to essentially keep you in check, or have family members come and that family member bids for you even though you're in the room, all that kind of stuff, because like...
It's emotional.
And it's exciting. And some people love gambling. Adrenaline. And it's kind of like you want to win. So if that's your personality,
go high.
Talking to you, Luke Emerson, like if that's your personality, maybe have someone do it on your behalf that is going to stick to what you've told them is your max limit and that kind of thing. Yeah.
Nice. Cool. And so... let's say you decide that you're either going to go to auction or you know,
make an offer.
Yeah, that kind of thing. How does that process work? And the process of actually buying the house, because when you bid at an auction, you're basically kind of guaranteeing it.
You're unconditional. Yeah. So so one thing that I guess is part of like this first home buying journey or just home buying journey is you definitely need to understand the different ways in which properties can be purchased, and you can talk to the real estate agents about that to understand if it's, you know, price by negotiation, if it's a deadline sale, if it's an auction. There's some other one that I don't remember, but kind of similar to like a deadline sale, like tender, like that kind of thing. So you really need to talk to the agent about what the parameters of that are. Auction is easy in the sense that it's just like, the auction is this date at this time and you show up, and if you make a bid and you win, you have to have your deposit available immediately on the spot, and it's unconditional and you're committed to that contract. So that's why they say you cannot go into a auction without a pre-approval, and you also can't go into an auction with a pre-approval that has conditions, because if your bank says, hey, like, you know, or if you have conditions, i.e. you haven't had time before the auction to get a building report and you're not convinced that you're comfortable doing that, you're not really in a place to bid, because you can't bid with conditions. Can't put your hand up and be like, we bid $1 million, but on these conditions. No. And
KiwiSaver, what about that? Because
that's fine.
It's fine. You can bid even though KiwiSaver takes a bit of time to get out.
Yes. Yeah.
Okay.
Well, yep. But you need to have so the deposit that you have to pay on the day that you win the auction is different from your total deposit based on lending.
Right. Okay.
That's the deposit that's noted in the sales and purchase agreement that's defined by the vendor.
Okay. So it could be not the whole thing.
It could be 5%. It could be a set dollar amount. It could be, you know, that kind of stuff. So you need to read the contract and have had your lawyer and other people help you with that, because you can't just rock up and be like, here's $2,000. And they're like, it was $50. And you're like, oh gosh, I need to ask my KiwiSaver provider for that money and it'll take 10 days. Like, no. Yeah. So you do need to think about those things. A broker will help you. A lawyer will help you. This is probably a really good time to mention that, like, this is absolutely the time where you need to start making sure you have a solicitor or a lawyer in your toolkit, because they're the person that needs to help you read through the contract. They're the person that needs to help you prepare for either bidding at auction, knowing things, or putting in an offer if it's a like price by negotiation or offer situation and you want to make a like written offer either with conditions or without.
Yeah. So the contract that you're reading before the auction, is that how do you get that?
It's literally it's in that pile of documents that's on the table when you walk in and look at the open home.
Oh, I see.
You should see it straight away. Okay. And the sales and purchase agreement will always be on the listing. Oftentimes agents won't give it to you unless you give them their email, because
lead gen.
Marketing 101. If you are, say, just trawling Trade Me and you see a house, you'll often have to go and like send a request to get the documents, or you just jump directly on the actual agency's website and you probably fill it online and then you can download them straight away. But there's documents that they have to have available, because it'll have things like the settlement date, which again is defined by the vendor unless otherwise negotiated. It will have the terms of the deposit as well.
Cool. So Kat and I ended up chatting way longer than expected, and we've decided to split this episode up into two. So stay tuned for the second episode, part 2, coming later this week, where we chat through the next steps now that you're ready to purchase. Where to from here? A big thanks to Kernel for enabling us to do what we do. Don't forget to hit like and subscribe wherever you're tuning in, whether that's video on YouTube or listening on Spotify or Apple Podcasts. Until then, we'll see you next week.